Hi, this is Alan Brochstein of 420 Investor. I want to take a few minutes to talk about Nemus Bioscience, symbol NMUS. This is a company that I started following very closely in March after watching it from November. At that time, I reached out to my subscribers and shared an initial research report suggesting that we be patient. And of course, what does it do? It runs up to $5. I watched it trade down until right about here, and I bought a very small starter position in one of my two model portfolios. That is the 420 Opportunity Model Portfolio, a fully invested, long-only model portfolio designed to beat the Benzinga 420 Marijuana Index, which it has. Well, the timing proved to be pretty bad, and it wasn't until the stock broke $1 that I added a second position, and actually that was fairly recently. And I'll talk about that in a minute. Today, I loaded the boat, so let me just tell you about that. I have no personal position in Nemus. I have there's no sort of paid work that I do for Nemus or anything. So just to let you know the only disclosure I have is that it is in both of my model portfolios, including what I call flying high, which is a more short-term oriented trading model, also long only. That model portfolio we added at $1 for the first time. That was the first time we ever did a trade in that portfolio, and we added to both these model portfolios today. So I want to take just a few minutes and talk about the fundamentals, and then I'll get back into the chart and tell you why I'm pretty excited here. So Nemus is a biotech company. I guess that makes sense. It's Nemus Bioscience, based out of San Diego area, I believe La Jolla to be precise. And one of the things I found interesting about it was that we all know how doing cannabis research in the United States is very challenging. There's one entity that's allowed to grow all the cannabis in the United States for NIDA, and that's the University of Mississippi. And that's the entity that's done years and years of research on cannabis. And so Nemus has an exclusive license with them and a great working relationship. So that is a real asset to the company. Furthermore, the company has pretty strong management and board of directors, especially compared to other OTC companies. Third of all, and I'm not going to go deep into the fundamentals, this is a brief call, and I will post a press release just so you know why I got excited today specifically. But the other aspect that's interesting about Nemus, they have other things in their pipeline, but the main thing they're working on is are eye drops for glaucoma. These have THC in them. And there's a lot of evidence that smoking cannabis can reduce intraocular eye pressure, but it turns out in rabbits, it's not a big market for rabbit glaucoma, but in rabbits, it's been shown to be safe and effective in reducing glaucoma. Now, this is a preclinical drug, so it's very early stage. Research is in phase 1 trials supposed to begin next year, and it'll take a few years for this to play out. I think in a best case scenario, this drug could have over $1 billion of sales. As it gets into clinical trials with the FDA next year and completes those trials, and before it would go into phase 2 and phase 3, very likely that Nemus would be able to find a partner in the eye space. Now, I would have thought Allergan would be a good partner, and lo and behold, the president, I think he was the president of Allergan, recently bought stock in a private placement and joined the board of directors. So there's a little bit of a tie there, kind of interesting to watch. But this is there's just a handful of players in the glaucoma market. And so to have a new drug like this would be extremely beneficial. So that's kind of the end game for Nemus. But there's other things as well. That's enough of the fundamentals. There were two things that I was really concerned about. Number one, the trading volume was pretty low. That's never good. And the other thing, more importantly, they didn't have enough cash. You cannot be a biotech company and make any progress unless you can pay for it. And that's what we've been waiting for. Today was the day. They had been trying to raise cash, and I think they were able to sell about $1 million worth, if I'm not mistaken, at $2.50, but they gave these people price protection, meaning that if additional capital was raised at a lower price later, then they would be protected and get it at that price. And so The stock broke that $2.50 level, and that's when I bought, right before that, on paper for the model portfolio, and it was small because liquidity was still poor and kind of worried about the chart. So it broke when it was clear that they couldn't get it done at 250. They got it done today. And I'll put the press release link in there. It's not only that they got it done, but it appears to be a large, I think New York City-based institutional healthcare fund, and I think that the name of the company will have to be disclosed because of SEC rules, because they ended up buying 5 million shares, I believe, which would be more than 10% of the company. But in any rate, they have warrants as well. They structure this thing. The price on the stock is a private placement with 6-month restriction was 85 cents, pretty low price, but above the 50 cents the company was capitalized at before they went public. So it's an up round. There's no down round here. So it is disappointing. The stock was trading at $10, and they never really succeeded at selling until it got to a fairer price. When it's all said and done, with everything getting exercised, all the warrants that have been issued, there would be about, I think, 34 million shares. And 34 million, you can do the math, it's about a 40 million market cap, something like that right now. You may have seen all the action on Zynerba. If you're not familiar with Zynerba, and I'll bring this chart back in a second, recent whoops, I did not get that right. Recent IPO at $14. It opened up and traded as high as $40, 14 to 40. People are really excited over it. I'm not going to comment on Zynerba because there's not really a lot that I can add to the conversation. I'm not following it closely myself. It's a synthetic. Two products, also preclinical like Nemus. Nemus has 2 products too, but Glaucoma is the big one. You can look up Zynerba, but they're at the same stage. But they did a NASDAQ IPO, and people like NASDAQ. Well, guess what? I think Nemus is now qualified in mid-2016. After they file their 10K, they will be qualified to go to the NASDAQ, maybe without a reverse split. We'll see if they can get the stock back up to 4. That would happen. So the market cap right now on Zynerba, Nemus right now is about 40 million. Zynerba's market cap is about 250 million, and I think these two companies are pretty equivalent. I will give Zynerba a little bit of an edge on management. They have the guy running it's very highly regarded, but the Nemus team isn't bad either. Good experience with working in small biotech and pharma companies as well as global ones. So this is going to be a story that attracts more institutional investors when it becomes clear they're going to the NASDAQ. That's, in my opinion, why there's such a big spread. So hopefully that kind of explains the Nemus opportunity. It's a biotech stock, speculative, strong relationship with University of Mississippi, good management, and now the third leg of the stool, they have the money to move forward. It makes all the difference in the world. They don't have to go around with their hands out begging for money any longer. They're going to be negotiating from a position of power, in my opinion, as this development on the glaucoma drug begins. And that's not their only thing. Okay, I spent way too much time on the backstory. As far as the technicals go, I really don't have that much to say, except that look at the volume today, and it looks huge, but it was only about 70, was it 80,000? Something like that. So we're not talking about a lot of dollars here. 80,000 shares out of, I'm not sure what's in the float, but the outstanding is about 16 million. A lot of the other shares are warrants and not in the float. So 16 million shares, 80,000 is nothing. So it looks to me like we have a good bottom. It looks to me like we have a catalyst to move higher. I know that some people are probably hung up on the price at 85 cents for 6-month lockup. Or was it 85? 80. I'm sorry, 80 cents. I might have said 85 earlier. It's 80 is the price that they did the deal at. $1.15 were the warrants that were attached to it. It's about 6 million change of each. So like I said, check the press release. You'll get all the details. You'll also find out the names of some of the other investors in the deal as well. Kind of an interesting collection of people. So from a valuation perspective, I think the stock could easily get to $1.50 very quickly. And I'm telling my subscribers that I believe the stock will be at $3 in early 2016. So that'd be more than a double from where we are now. That's why I'm excited. So I think this is, let me show you one more chart before we go. This is the 1 month. Let's change it to 2 months. So you can see the trading over the last couple of months. Stock just got hammered. And this was probably, people knew that they were potentially lowering the price of the private placement. That's probably what's going on. That's why I was just hanging low, waiting for a good bottom. So back to the long-term chart. I think we probably have a good volume. We got a bottom. We had a lot of volume down there. Probably could run into a little pressure. Selling at $1.50 is just underneath this breakdown level here, as well as this old low back here. So from a chart perspective, but I think we can work our way through that. I look forward to the stock getting over $2 hopefully by year end. So if you found this helpful, this is the type of stuff we talk about every day at 420 Investor. I'll include a link in this YouTube video. I hope you enjoyed it. Take care.